welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the window to get all your stock-related queries answered by them. But before that, let's have a quick look at what the markets are up to. So Cheryl, we are in the red territory, but it's just a 0.5% fall that we are seeing on both the benchmark indices.
Absolutely. A very good morning to you, Shrishti. Yes, 0.5% fall is what we've actually kickstart with trading sessions. In fact, we are holding on to those levels since the word go. In fact, I believe short while ago we did hit the day's lowest point. From there on, we are trying to make some sort of a recovery. Yes, 0.5% downtick coming in for Nifty. Remember that even on Friday, towards the later half of the trading session, we did see a sharp fall as well for the markets. But talking about what the Nifty Bank is doing right now, Nifty Bank is moving in tandem with the benchmark indices. If you look at the advanced decline duration, skewed in the favor of the declines as of now. Talking about the list of gainers, then you have L&T Power Grid, Adani Enterprises, Adani Ports, SBI Life among the top gainers on the Nifty. While on the flip side, this is Asian Paints taking a sharp knock in trade today. You have a CLSA note that's downgraded the counter today. And yes, off late, things have not been working well, especially for Asian Paints and the paint sector as a whole, given the fact that the competition now is only going to increase with Grasim's entry into the paint segment. So yes, Asian Paints down 4%, Hindalco is down 2%, BPCL, DVs, Wipro are the other set of losers. Talking about the sectoral indices and what they are doing at this point in time, the only sector that could be seeing bleak shade of green would be BSE Power Index. Apart from that, all of the sectoral indices are in the negative territory. It's the IT index that's the top sectoral loser. Realty also seeing a knock in trade today, as well as the broader markets are also seeing shade of red. So that's the way how the markets are looking like at this point in time. Shrishti, yes, not that a great start to a brand new week.
Okay, but with this, let's move on and let's shift focus to the footwear stocks. What is the trend that is shaping up in the footwear stocks, as well as how are the valuations stacking up at this point in time? Let's put the spotlight on this segment and let's go across to Winnie to know more on this space. Take it away, Winnie.
Good morning, and absolutely we're keeping an eye out today on the footwear stocks. Let's not forget in terms of first the numbers that came in for the December quarter. Nothing exciting, right, that came in from this segment as well. What we saw coming in is mass versus premium. Premium is a trend that has been doing well. Now, other than that, when you're looking at it in terms of campus active footwear, when this company listed, we saw it see a sharp run up as well. But now in terms of valuations that we've seen coming in, campus activewear in the last 1 year has actually been an underperformer versus the other footwear companies. Even when you look at it in terms of returns that have come in from these other stocks as well, whether Bata, Metro Brands, Relaxo, that also seems like a bit of a decline that I've seen specifically in the last 3 months as well. So in terms of obviously demand trends, that's been changing, and also in terms of a lot of unorganized players or not listed companies, we're seeing a lot of increased competition that has come in for campus active footwear as well, and other companies as well, especially in this listed player space as well. So campus's revenues were quite flat, and the shoemaker hasn't been able to actually catch a break for a while on this front as well, and that is a concern that's coming around campus activewear. But overall, we've seen a bit of a sluggishness that has come in the footwear industry as well, and that's what we're keeping an eye out on. But valuation wise, surely seems like 1 year forward PV for Bata is at 47 times, Metro Brand 67 times, and Relaxo is at around 74 times versus the average PE. It's still lower when you compare for a Bata as well as a Metro Brand. Bata at least is still lower. So in terms of valuation, Bata looks quite cheap versus the 5-year PE that we've seen, as well as the average of historical average versus 1 year forward. Seems like Bata is cheaper than Metro Brands or a Relaxo footwear as well in terms of the valuations.
Thank you so much for that, for putting into the valuations in perspective for us when it comes to the footwear segment. Thank you so much for that, Vinny. But let's bring on board our experts, Kunal Bothra as well as Vivek Karwa, to understand how should one actually look at investing when it comes to the footwear segment as a whole. A very good morning to you, Kunal, as well as Vivek. And Vivek, let me first come to you and let's talk about the footwear segment. If I can read the note that I have is coming in from Ambit right after the Q3 earnings for the footwear segment, while they're saying that the Metro Brands continue to outperform within the segment, but there was a low base coming in for Relaxo, for Bata as well. They were hit in the earnings. Their earnings came in way below the estimates. But how should one actually look at this footwear segment? Because apart from the fact that a lot also depends upon how the trends are shaping up, the fashion trends per se shaping up when it comes to the footwear segment, as well as you also have a raw material impact as well in these counters, isn't it?
Good morning, Shiril, and everybody on the panel. I don't take this as a point that COVID had hit these companies badly. Yeah, it had hit, but a lot of water has passed under the bridge, and we are in 2024 now. So everything seems to be normal. So COVID cannot be a reason. Now, as you said, the input costs of raw materials are quite high still. And the biggest problem in footwear is the market still remains largely unorganized. So you will find a lot of unorganized players even now, and the listed space or the branded and the listed space is quite small as per say market share even now. So the valuations still look costly. In fact, the median PE of this sector itself is around 55, which is quite costly. And what I feel is as we move from unorganized to organized and more brand consciousness among the customers, I think these companies will do well, but that's a 5-year story. So if you're going to buy for short term, I don't think there is going to be any big uptick from here. Yeah, because the stocks have been beaten down, maybe 5-10% is possible, but not going to be a wealth creator as such. So if you really want to buy very, very slowly. And as I said, you should have 5-year opinion in mind, waiting for this unorganized to become organized, more and more organized.
Okay, so slowly and gradually you can increase your exposure in this one, but you need to have a long-term vision if you're going for one. But Kunal, coming to you, all these stocks have seen quite a fall in the recent times, in the past 6 months, no substantial gains over there. Is there a bottom in place that you are spotting on the technical fronts, and any stock that stand out for you?
Good morning to you, Srishti, Cheryl, as well as to everyone. Now, my sense is that this is a space which has been a huge underperformer. Now, I was actually looking at the charts for many of these stocks over the last 4 months, 5 months, and for Bata India over the last many years. And the stock has actually been languishing at the sub 1700, 1800 levels broadly. In fact, 1400 right now for itself. So that clearly tells you that the stock, the space, whether it's metro brands in the last 2-3 months, Campus Footwear, which has also seen a sharp correction. Many of these stocks have already seen a sharp correction for themselves. I would not be hurrying into buying or venturing into try to bottom fish this space, because the bigger concern with such kind of trends is that how long can these stocks remain into that zone of underperformance. And I think that's the bigger question mark, because at one point of time there are far more better relative opportunities which the markets can keep on throwing in this kind of a vibrant kind of a market. But I think in that regards, I would probably avoid the footwear space completely as of now.
A complete avoid that's what is coming in from Kunal when it comes to the footwear space. While for the longer term, Vivek is saying yes, you can gradually look at some of these counters, but yes, an avoid from Kunal. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we will start taking all of your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Viewers, you can connect to us live on the WhatsApp number that's flashing on the top of the screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. Along with that, mention the buy price, the quantity, as well as the time horizon for which you want to hold a particular counter. In that way, our experts will be able to help you better. And talking about experts, today we have Kunal Bothra on the technicals, while on the fundamental analysis, we have Vivek Karwa. Once again, good morning to both of you, gentlemen. And let me kickstart with the query. The first query that I have is coming in from Sudha, who has a very small query saying that should she go ahead and sell NHPC. She's sitting with a profit of approximately 45% over the last 2 months and wants to look to re-enter this at a lower price. Kunal, what's your take? 1,000 shares of NHPC she's holding with a 45% profit. Is it advisable to exit now, book our profits and then re-enter at a lower price?
See, you can try and do that, but I would suggest that not to book out your full quantity over here, because the stock is actually placed at a very it's placed at a midpoint of a very strong rally, and then post rally the phase of consolidation. So in the last 1 month, February so far, The stock has formed a high of 115, a low which is closer to 77, which means it's already gone through a phase of more than a 30-40% correction in this last 1 month from the recent swing highs. Now it's come back towards the 90 mark, which is exactly the midpoint of this 40-point range for NHPC. So if in case the stock comes back towards 77, then I would believe that that could be a good point where you may look to average out further, or maybe look to buy back whatever you sell at current prices. And on the other hand, in case of the stock comes back to say 110-15 mark, then I think you can sell the balance quantity which you are holding for the stock. So I would suggest booking partial profits only at current levels.
Alright, moving on, and Vivek, coming to you. This query is from Renuka from Kerala, and she wants some advice on stocks for a long-term investment. She has 4 stocks in mind. One is Geo Financials, Tata Technologies, Cochin Shipyard, or HAL. Any stock that you like at this point in time for a long-term investment? If not, then any other stock you would like to recommend?
Among these 4, I would go with HAL, because defense is one story which is going to be a structural growth story over next many years. This first thing. On the Geo, yes, I have been very, very bullish earlier. I had given buy calls with a target of 300. And as a disclosure, we are booking little bit profits today. So yeah, once it comes down, long-term story looks good. But in short term, I think a lot of positive things are factored in. So short term would be a sell, long term would be a buy on Geo, HL, long-term buy.
Right, moving on, Kunal, next query is for you from Prathamesh. He's writing to us from Mumbai. He has Suntech Realty that, he wants to know if he can look to buy Suntech Realty at current price for a period of about 6 months or so.
I think it could be a good strategy. The stock is just priming towards a potential breakout in the long-term charts. I think 2018, 18-19 somewhere, the stock had hit a high which was closer to 540 levels. And then for, I think, consecutive over the last many years, the stock has tried to break past about the 540 mark, but it's unable to do it. Recently, the only change which has happened is the indicators which have come back into positive territory for Suntech Realty on the monthly charts, as well as the volumes inching up slightly higher. So that means that potentially the stock may near a breakout. So I think it's a good trade. And as I said, if 540 level gets broken out, which is a multi-year high, post that you can expect a quicker return of more than 15 to 20% for Suntech Realty.
Alright, moving on, and Vivek, the next query is from Bishaka from Kolkata, and he's holding 10 shares of ABB India from a price of 4,263 rupees. What a run-up is what we have seen after the results on this stock. But good time to book out profits, or should he continue to hold on?
See, capital goods, overall the story still remains intact. But I feel that the valuations in short term are quite stretched. And hence, even if you book small profits on every rally, I think it should again test its earlier levels of 5,400. But as it goes up, book little bit profits. And on dips, again, you can enter. So short-term valuations really look very, very stretched at 88 and 90 PE. I would not have the guts to buy fresh here.
Coming to you, this one's coming from Shiva Shankar, who's writing to us from Bangalore. He's a senior citizen. I'm unsure. Okay, he already has Yes Bank in his portfolio, about 1,000 shares. He has Ireda as well as Tata Tech. Now he wants to know whether it makes sense to buy some more of these counters in his portfolio. He's not mentioned the buy price for any. I believe Ireda and Tata Tech are newly listed counters. But for Yes Bank, what's your view?
Well, you may consider to average out further, but I think the pricing at which you average should be very, very important, and something interesting, because Irida is right now gone into a lower circuit mode. I think if I'm not wrong, over the last 1 month, the stock has seen some 6 or 7 days or maybe higher than that of days where the stock has opened at a lower circuit and remained at those points for itself. So you have to get into a zone where the stock irons out this circuit mode, and then look to try and average it out. Maybe the circuit filter could probably be a bit more rested, closer to 125, 130 mark. So maybe I think you'll have to wait for another 15 rupee drop into the stock to try and look to average out further. But again, that behavior is more important. For Yes Bank, the stock is now nearing a break of its 50-day moving average. If that happens for the stock, which is closer to this 25 mark, the 50 DMA is at 24.75 for Yes Bank. So I think closer to 24, 24.5 is where you can look to average out further.
Once again, coming to you, Kunal, this query is from Nizam, and he has a query on 2 banking names. He's having Bank of Maharashtra, 800 shares at a price of 68 rupees. And the other stock is Sujeevan Small Finance Bank, 600 shares at a price of 58 rupees. What to do in both of these stocks?
See, both of these stocks are good in terms of the long-term trend, but the pricing at which you've bought is extremely steep. And what has happened is both these stocks, so Jeevan Small Finance Bank as well as Bank of Maharashtra, both these stocks have now gone through are going through a patch of correction, both in terms of time-wise and price-wise. And I think the waiting period here could be significant enough. So my sense is that if you're okay holding on to the stock for the next 6 months or so, and then expecting that slowly and gradually the stock may come back to the cost price and then give you steady returns, then it makes sense to hold on to these names.
All right, let me take the next query then, and this one is coming in from Muni Rajulu. He's writing to us from Andhra Pradesh, and a couple of stocks he's mentioned actually. Vivek, I'm unsure that if you track two of those. One is Swiss Military Consumer Goods, one is Megasoft. I'm not sure if you track both of them. The other two that he has is Royal Orchid as well as Viatech Vabag. He wants to know, is it the right time to enter Viatech Vabag or Royal Orchid at this point in time for a long-term period of about 5 years plus?
Orchid for 5 years plus, I think should give you positive returns. Being into hospitality and hotel industry is doing well. The other two companies, as you said, I would avoid commenting on them. And Megasoft, again, a similar story. But see, on the VA Babak, it is very, very capital intensive industry. So what I have understood till now from the company is you give them as much as capital needed, they can easily absorb it because the requirement is so high. And many of the projects are government oriented, wherein the cash flow is always slow. So at this valuations, I would not suggest you to enter the stock. Yeah. If you look at the history also, last 15 years history, stock was trading at good levels, did really bad because of government projects. So I would avoid at these rates. Yeah, if there is a correction of 20-25%, at that time we can discuss it again. But at 780 is all right.
All right, moving on to the next one. And Kunal, this query is specifically for you, coming in from Venkat Rao from Visakhapatnam. He's a senior citizen and a long-term investor and wants to know, can he enter SJVN and PFC at current levels? And if not, then any levels you could advise him with where he can make a fresh entry?
Well, I think both these stocks are, I would suggest to, to be bought into on corrections, because what has happened is for the first time, if I'm not wrong, for PFC, the MACD indicator has started to get into a breakdown mode, or at least gone back to the negative territory, which means that there could be a very strong possibility that if the indicator remains to be on the negative territory, the stock may continue to see a corrective phase. Now, in the last 1 month, it's already corrected from 470 to right now just about hinging towards the 400 mark. So potentially 15-16% correction has already happened for the stock, and there could be a space for at least another 5 to 10% correction, if not more. Depends on how long the indicator remains into the negative territory for PFC. So I would suggest buying on dips. You can start maybe as a ballpark number, say closer to 380, 385 for PFC, and a similar 5 to 10% correction at least for the other stock which you mentioned.
All right, this one is coming in from a viewer, Jaya, who's writing to us from Bangalore. And Kunal wants your view on Finolex Cables. She has the shares at a price of 1,029 rupees per share. After results, the stock has been going, actually heading lower. So she wants to know whether she should stay put with it or exit out of it now.
Short-term charts are not encouraging for Finolex Cables. I think the stock has broken below the 200-day moving average also. The last time the stock had gone through a touch and go towards the 200-day moving average was in the month of October 2023. But similar is the fate this time around. But again, on the back of some negativity in terms of indicators. So I would suggest that maybe just wait out for another week or so. If the stock is unable to get into any major rally or it reverses the trend from here on, then I think it could be a good time to exit. So maybe keep a stop loss of 925, 940 on the stock. If it closes below this, I think it's a good time to exit.
All right, moving on. And Vivek, what will be your advice on RITES as well as Petronet LNG? Santosh wants to know, are they good bets for the long term, and can he make a fresh entry here?
See, RITES at these levels, I would avoid. Again, the valuation comfort is not there. And but the other stock, Petronet LNG, I think you should actually be a buyer in it. The stock has corrected from the highs, And I feel longer term, the gas and the energy sector should continue doing really very, very well, and especially gas and LNG. So petrol and LNG, yes, a strong buy.
Okay, this one is coming from Chandra, who's writing to us from Mysore, and Chandra has Schaeffler, about 300 shares at a price of 2,100 rupees per share. She's been holding on to this counter for the last 1 year, Kunal, but now she wants to know whether she should book out profits on this one or stay put with this, or would you advise her to switch to some other fast-moving share?
So I think, of course, shifting towards a bit of a momentum stock could be a better strategy. Schaeffler, on the other hand, is going through a major time-wise correction. So I think the stock is just hanging around the 200-day moving average over the last 8 or 9 months, or maybe more than that. So it's been fluctuating at a 10% band plus as well as 10% band minus the 200-day moving average. So no major trends emerging into the stock. It is always better that you can probably shift to some other momentum name if you can maybe look out for if you have a time frame which is very near term oriented. But then if you're looking at this from a very, very long term view and you want to encash on the long term trends, by that I mean at least 3 years, 5 years plus, only then it makes sense to hold on to the stock.
All right, Vivek, two counters wherein Pradeep wants an advice on. Firstly, he's holding 20 shares of AGI Green Pack and his buying price was close to 570 rupees. And he also has Reddington, 100 shares from a price of 156. He's sitting at decent profits in both of these stocks, but he can continue holding it for the next 1 to 2 years. What will be your advice?
See, AGI Green Pack definitely say yes, hold on, and also buy. Now, the glass bottles which the company supplies to pharma industry is really doing well, and I feel at this valuations the stock still looks undervalued, and I feel the stock could be 1,000 rupees in say going future. Now, Reddington, this is one stock which actually remains in one range. It was really doing bad, and there is some sort of recovery. But what I feel is, as major supplier of iPhones, that sector also should continue doing well. So longer term, yes, both the stocks are looking good.
All right. On that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we will continue taking your query, viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And continuing the same, Kunal, coming to you for the next one. This query is from Dheeraj, and he wants to know, can he go ahead and buy Indian hotels at current market price? The stock has seen a great move, especially in the last 1 week or so. Can he enter for a short term period?
See, I would suggest to avoid, because a good stock bought at the wrong price, or maybe not the right price, could actually lead to a lot of waiting period for the stock. Now, the only concern for Indian hotels when I look at the technical factors is the stock entering into a deep overbought territory in terms of the indicators. So RSIs are extremely overbought on the weekly charts, on the monthly charts. In fact, on the weekly time frame, the RSIs had hit levels of, I think, around 87, 88 for Indian hotels. So which means that the stock is bound to get into a cool off or a corrective phase sooner or later. So, and I believe that the correction may not just be restricted towards 3-5%, but it could be at least a double-digit correction from the previous swing highs, so the major swing highs. So whenever you see such kind of a steep overbought nature in terms of indicators, we tend to avoid entering or recommending fresh trades into these names. So I would suggest to avoid the stock at current levels. Maybe if the stock cools off to that 10% mark, say from the previous swing highs, and comes closer to 540, 530 mark, that could be a good starting point for you.
All right, the next query that I have is coming in from Parikshit Sethi. He's asking about Inox Wind versus Power Grid. Which one is better to invest right now? And given the fact that he's used the word invest and also he's used the word capital protection is a key criteria, I'll come to you, Vivek, on this then. Inox Wind versus Power Grid, which one do you think is a better investment for the longer term? Also where Parikshit will be sure that his capital is protected.
Okay. I like this query, particularly when you use the word invest and not say buy for short term. So straight away the answer is Power Grid. If you compare Inox Wind and Power Grid looks way say better than Inox Wind. So Inox Wind is right now going with the wind, I can say that, but Power Grid is no brainer. So go with Power Grid, your capital also will remain protected.
Okay, that's the call coming in. on Power Grade. But Kunal, the next query is from Rashmi, and she wants to know, at this point in time, is Electra Green Tech a good buy?
Well, it's a good buy, but again, not a best price to buy the stock, but it's a good trending stock. In fact, after 4 or 5 months of major consolidation, if I'm not wrong, in the month of June, July, the stock had made a top, which was around the 1500 or 1465 mark, and from there, the stock in the subsequent 4 5 months remain into consolidation, and then the fag end of December is where the stock started to get into a breakout over that 1500 levels. Right now it's at 2000, which means potentially the stock may get into a further time-wise correction. So if you can buy this on dips, so you can start at levels of around 1955, 1960 in case the dip happens for Electra Green Tech, and then look to maybe add at a couple of percentage points lower or a corrective phase for the stock price. So buy on dips is my strategy for Electra Green Tech.
All right, the next query that I have is coming from Padma Siva Rao, and Padma Siva Rao has Indus Towers 25 shares at a price of 180 rupees per share. Wants to know what sort of a target can he keep in mind for Indus Towers when it comes to the next 1 year. What's your take on this one, Kunal? Indus Towers, hopefully things should move in the right direction for this particular counter, given the fact that if things work out well for Vodafone Idea, Indus Towers will be a beneficiary.
Well, yeah, there could be a possibility for the stock, but my sense, Cheryl, is that the indicators and the price trends have been a lot more erratic for Indus Tower. And, many a times the stock sees that 10%, 15% surge in a very short span of time, but that's not backed by any major pickup in terms of volumes. For example, today the stock is up some 2.5%. It's come back towards a fresh 52-week high or maybe a 2-year high for itself. But the volumes today are almost or less than half of the volumes the stock had seen on Friday, which means that even though the prices are moving up higher, it's not backed by a very strong set of volumes for the stock price, and that's the more disappointing fact for Indus Tower. So my sense is that if you've already bought the stock at lower levels, and if you're already holding on, you're sitting on good profits, it could actually be a good time to book out profits over here, and then look to buy back on phases of correction. Maybe 220, 225 could again be a good phase to try and buy the stock again.
All right, moving on. Vivek, the next query is on Devyani Internationals. Shrikant is holding more than 1,000 quantity from a price of 190 rupees. What will be your advice in this one? Should he move out of this stock, or can he hold for the long term? And any targets if you have one?
See, if you're looking at absolute long term, only then it would be a hold, particularly because the QSR space is still struggling with, say, input costs and your say even the renters, and due to the competition in that space with so many other brands, the companies are still not able to come in profits. So similar case with Devyani. I don't think the stock should do more than 200, even if it starts making profit in short term. So the wait is going to be longer. So if you really want to if you don't want to miss the opportunities, what I'll suggest is go into better place. Even Zomato looks better play than Devyani. But absolute long term, yeah, the stock should do well.
Kunal, coming to you, this one's from Sri Krishna, writing to us from Hyderabad. 30 shares of Dixon Tech at a price of 5,940 rupees per share. He believes that the stock has peaked today. He wants to know whether is there any scope of the stock rising further on from here, or stay put, or should he go ahead and book profit? 7,000 actually on Dixon Tech. Even I'm amazed actually looking at the stock price right now. What's your take on this one?
I think it's a stock which is still looking to trend quite strongly on the charts. In fact, over the last 2-3 weeks, the stock has finally shown signs of bullish momentum coming back again for itself, breaking past about the previous highs of 6,920, 929 for Dixon Tech on the spot levels. I think it's a good stock to hold on, provided you are not a very, very short-term trader.
Kunal, the next query is coming from Rajiv, and he wants a short-term view on Vascon Engineers. This stock has also seen a good run-up, especially in the past 1 year, and Rajiv's buy price is 75 rupees. What's your view coming in on this one, and any critical levels to watch out for?
See, I've been tracking the stock over the last few months, especially when a point when the stock had seen a huge pickup in terms of volumes for itself. That was, I think, the month of September, October for Vascon, and the stock was almost at 60 rupees approximately. So from there, it's delivered return of more than 50%. I think 90 approximately was the recent swing high for the stock. But I believe that somehow the stock over the very short term is going through a consolidation. And I think this zone of consolidation, 83 and a half is a pivot for the stock. So if you're looking to book profits, since you've bought at 74, 75 levels for the stock, I would suggest 83 and a half could be a good pivot point where you may look to consider booking profits for the stock.
All right, Kunal, another one your way. This one's come from Sarma from Hyderabad. 50 shares of Gland Pharma at the price of 1,875 rupees per share. What's the short-term view on this one?
It's a bit negative for Gland Pharma on the very, very short term because over the last 1 or 2 weeks, the stock has seen 5 or 6 straight consecutive negative days, negative candles for itself. It's broken below the 50-day moving average. My sense is that the stock should correct by at least another 100-150 points more before it tries to get back into any zone of near-term stability. So if you're looking to buy on dips, then I would suggest wait for dips. I think closer to 1700 or even below that level is where you may consider to start buying.
All right, Vivek, the next query that I have is coming from Neeraj, and he's holding shares of GIC more than 100 in quantity from a price of 404 rupees. What's the outlook on this one, and are you positive on this particular counter?
Shrishti, being a general insurance company owned by government, I feel the run-up has been done. Now, if you compare it strictly with other general insurance companies, the stock might really look very, very cheap. But what I feel is the quality of management, the quality of business, and the processes in this company, in private companies, are much better than this. So the run-up has been done. I think you should book out profits, and I don't expect too much from here.
All right, this next one is coming from KB Singh from Chandigarh, and he has Quick Heal 500 shares, Kunal. He's purchased this at the levels of 140 rupees per share last year, that is in the month of May. He wants to know whether he should book profits or hold on to this for another quarter. What's your take coming in on this one? Does it make sense to exit right now, given the fact he's already making a healthy set of profits?
See, you may consider to hold on to the stock, but if you can, since you bought at 140, which means you've literally caught the bottom into the stock price, I would suggest that keep a trailing stop loss. So at least over the last 6-7 months, we've seen this tendency for Quick Heal that the stock is respecting its 50-day moving average and is not yet broken below the 50 DMA in this last 6 months, the moment the stock had broken past about those levels. So I would suggest that keep that as a trailing stop loss. Currently that level is around 437, but if you extrapolate this to say another week or so, then that level could come back to say 450 levels for Quick Heal. So I would suggest to have a trailing stop loss over here rather than booking out complete profits over here.
All right, that's the view coming in on Quick Heal. But with this fears, it's time to slip into a very short break.
All right, welcome back. You're watching Buy Now, Sell Now on ET Now. Time for the rapid fire then. And starting with you, Vivek, this time the query is from Raj, who's writing to us from Pune. He's holding AB Capital 3,000 shares for the last 6 years at an average price of 173 rupees per share. What's the long-term view on AB Capital?
Last 6 years have been tough, but next 3 years should be very good.
All right, Kunal, the next query is from Chandrasekhar. HPCL, avoid or buy at this point, and any short-term targets to look out for?
Avoid.
All right, Nethik wants to know what's the entry price for Hoodco right now, Kunal?
I think as I said earlier, 175 could be a good point to enter the stock.
Okay, Vivek, Rashesh is holding 1,000 shares of Federal Bank from a price of 145 rupees. Should he hold this counter or sell?
Continue holding.
Kunal Thomas wants to know, is it the right time to buy IFCI shares?
Not really, I would suggest to avoid.
Okay, Vivek, Girish is holding 5,000 shares of Zensa Technologies and his buy price is 586 rupees. What to do in this one, exit or hold?
Right now, hold.
All right, Bhaskaran has Polyplex about 100 shares at a price of 999 rupees per share. Should he hold on to this one for the next 6 months, Kunal?
I think you should sell.
Okay, Kunal, the next query, what's the outlook on this one?
Excellent chart, you should continue to hold on, keep on adding on dips as and how it comes.
All right, for the short term, Kunal, do you think that PNB and Vodafone Idea are good buys?
Vodafone Idea, yes, PNB, not really.
Okay, Vivek, any word on Irida? Vijay is holding 1,000 shares at a price of 190 rupees.
But this race looks quite costly. You should book profit.
All right, Vishwanathan Nair wants to know about Varroc Engineering. Buy price is 519 rupees per share. He has 100 shares of this one. Should he average right now? Vivek, what's your take coming in for Varroc?
You can average.
All right, But with this, it's time's up on the rapid fire session as well as on the show. Thank you so much, Kunal, as well as Vivek, for joining us today and helping all our viewers resolve their stock-related queries.
All right, and the Finance Minister will be meeting the heads of various fintech companies today to address the regulatory concerns in the industry. The Deputy Governor of RBI will also be present at the meet. My colleague Sumit is here to tell us what's likely on the agenda for this particular meeting. Sumit, take it away.
The crucial meeting between Finance Minister Sitharaman and fintech firms will take place today. It is the first meeting post Paytm Payments Bank issue, where RBI has put a lot of restrictions on the Paytm Payments Bank. In the light of that, many fintech firms had concerns. So today, FM will in a way address the concerns and also will act as a mediator between regulators and fintech firms. So from fintech firm side, Amazon Pay, PhonePe, Google and other top fintech firms, their representatives and CEOs will be present. From the regulators side, a Deputy Governor of RBI will be present along with NPCI, National Payment Corporation of India, and some other regulator representatives will be present. We are also hearing State Bank of India representatives can be here in the meeting as well. Overall, as far as the fintech sector is concerned, it is contributing to the financial inclusion goal of the government. That is why government is overall sympathetic towards fintech companies. Also, fintech companies are high on innovation, so the message to be given will be that fintech companies should be conforming to the norms, KYC norms and other norms. On the other side, regulators should not be over hard or should not be overburdening fintech companies with issues. So in the light of all that happening, today's meeting is important. That is going to take place between Finance Minister and top officials of fintech firms in India.
All right, Sumit, thank you so much for getting us all those details. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching, but don't go anywhere. Markets in noon will take the action ahead.